Whoa, Jaja. Oh, Jaja. Jaja the creator. The only love that's righteous is the love of Jah. The only love that's righteous is the love of Jah. I'm gonna put on an iron shirt and chase the devil out of earth. Oh yeah. Hello class, shall we begin? Seek ye first the kingdom of God, and these things shall be added unto you. Do not be afraid, little flock, for your Father has been pleased to give you the kingdom. Oh, I'm sorry, wrong class. My bad. Shall we begin? Let's jump into the numbers. And our cash flow, for this particular example, I'm going to do something a little bit different where I go really low. And I know this person has high cash flow, but we did this for a reason, okay? So here's where she's at on cash flow, 2,200 to 3,000, okay? But we're gonna work with this number for today on our velocity banking side, okay? And we acquired our debt weapon. What is a debt weapon? Unsecured line of credit, personal line of credit, business line of credit, HELOC, credit card, any credit card with a promotion, 0% balance transfer, 0% APR, 12 months, 18 months, 24 months. Easy access to cash, 3% or lower balance transfer fee only, okay? We can use credit cards to pay particular things, not everything. If you want it to pay for everything, gonna have to use the balance transfer fee to do so, okay? If you want to get away from that, that's where we go into acquiring our line of credit, okay? If our credit score is not great, what do we want to do? We want to build our credit so that we can get to the line of credit. If you got a home, it's got some equity in it, we could maybe go the HELOC route, make sure it's a home equity line of credit. I'm going to throw some links in the description on some cards as well on credit unions. Okay, I did a video not too long ago and I asked the whole community to put the credit unions that they're with in the state, how much they got, and the interest rates that they're paying. Okay, very important stuff. Get this down. I keep getting so many questions. Denzel, what is a line of credit? Denzel, how do I pay my credit card? How do I pay my mortgage with my credit card? How do I pay my car payment with my credit card? Listen, I'm gonna say it one more time. You don't have to use all your expenses through the credit card if that's your debt weapon, okay? Temporarily, we're using that to build credit, to pay off particular credit cards, okay? This all depends on certain debts you have, which then leads us to the line of credit, the HELOC, or some other type of debt weapon, such as a policy. Okay, that could be an example as well. Or the HELOC, right? When we're using the home, right? That depends if you have a home. If you don't have a home, we're not getting a HELOC, right? Then the other major question I keep getting, Denzel, okay, I make the chunk, okay? Do I keep paying my mortgage payments? How does that work? You didn't factor that into the scenarios? Yes, I did. Yes, I did. You gotta pay attention, okay? Yes, you keep paying your monthly payments each and every month. It runs through the line of credit. It runs through the debt weapon, okay? That's how we accelerate other debto, okay? So I just want to clear that up. Now, in this scenario, we have a husband and wife, okay? I'm in communication with the wife. She's an amazing lady. Contributed at tier 3 at a Texas area. I like my Texas people, man. Love it. Love it. Got like, what, 5-6 videos now in Texas. So if you're watching this for the very first time and you live in Texas and you're confused about this whole concept, I can put you in touch with some people, okay, that are doing velocity banking in Texas. They know all the credit unions. They know their debt weapons. They know their chunks. Let's go, okay? So our first chunk for this particular example, okay, and I'm going to break down why, all right, is 8,707.30. And we're in November, December-ish. That's when we're going to start, okay? Now, she has an advantage when it comes to velocity banking. It could be an advantage or it could be a disadvantage. It's really however you see it. But she gets paid once a month, right? So it's like really simple. She's gonna get paid once a month. She's gonna make her initial chunk, and she's simply gonna dump all her cash into the line of credit, one shot, zeroes out the line of credit, and then throughout the month, she's going to make transfers, small withdrawals that are linked to the checking accounto. So it's not the line of credit that's paying the bills. It's the line of credit that gets the money transferred into the checking account, which pays the bills, okay? And that's how that process works. I know I get a lot of confusion on that. I'm just adding a simple step. I'm just adding a step. That's it. You're still gonna pay your bills like you normally do, okay? It's just the source of the money is coming from that line of credit, all right? So here are the first 3 debts that we're gonna wipe out in one shot, which came up to that number, okay, which is our chunk. Now, when we do this, here is our cost right here, okay? And you're like, okay, Denzel, that doesn't make sense. I'm basically just, borrowing from Peter, right, from here, and then I pay all the Pauls, but then I'm still left with the same debt, and then I still gotta pay interest. So am I saving money on just interest, or is there something I'm missing? Yes, there's something you're missing, okay? This interest rate, this 12.99%, is calculated simple, okay? So when you times 8,707.30 times that, you get this number, 1,131.07, okay? That is for an entire year, 365 days, okay? If we owe 8,707, right, and all we do is pay the monthly payment on this line of credit after we wipe these out and we just pay the line of credit, yeah, you're gonna pay that. Now, if she dumps her income, which is more than the debt that we took out, first chunk, then she's gonna pay this, okay? In the first draw, she'll pay that because simple interest calculated daily, okay? So she's gonna save a few $100 on interest cost, okay? And her cash flow is gonna go up $486 because she's no longer paying these 3 debts. So technically, whatever this monthly payment is on 8 grand, she could just use that 486 and pay the payment, right? That's what some people would do when they consolidate debt, right? But I'm telling you, that doesn't make sense, because look, you'll just pay the interest there. Okay, you know what else doesn't make sense? If she takes this cash flow and just, attacks maybe that one for the next 2 months, and then that one, and then that falls off. Okay, that's gonna take too long, number one. Number two, she's gonna go broke in the process of trying to pay off $372,000 by just throwing extra cash flow at the debt. And I know that's a very, very popular question in the comments. Why not just use the cash flow, bro? Do the math. She'll be done around the same time as doing this. No, she won't. Number one. Number two, she'll go broke. All her money will go here. Okay? And we're close to retirement years. So we can't be risking this to pay off all this, okay? To be left with a simple TSP fund, 401k, IRA, okay? Not enough. It's not gonna get us to the promised land, okay? Not gonna happen, all right? Not financially. Spiritually, we'll still get there, okay? But the idea is to establish the kingdom here on earth, okay? I don't know why we're always talking about escaping life and going to another place, when in actuality the message is, for the kingdom has arrived. Yes? Okay. So let's do this. Ready? 8,707.30. We wipe out 3 debts. We get cash flow 486. Income goes in to the line of credit, zeroes it out. Okay? Now, these expenses are gonna come out. But guess what? You have to do 486 minus the expenses. Okay, so less money is gonna come out of this line of credit, and the cash flow is going to stay inside the line of credit, which is the difference of her balance that she'll owe at the end of the month. Okay, so if my cash flow is 2,070, well, you just minus that from that. She'll probably have a balance of whatever her expenses were at the end of the month of December or middle of December, okay? Like a 30-day period. All right? And we're going to say it's going to take about 3.4 months to pay off these debts, right? It took 1 day to wipe out these debts, and then it's going to take 3.4 months or less to wipe out this debt on the line of credit, and my cash flow goes up. Okay, so I'm being very conservative as for 3.4 months, because remember, I'm using this excuse me, and we are going to go to the next debts on the list. So if you're wondering, Denzel, how did you choose which debts to pick? Like, I'm confused. I myself, I've got a ton of different debts. I don't know, Denzel, I've got a this debt, a that debt. I'm kind of like all over the place. I always look at cash flow. How fast can I get to the cash flow, right? Because this is gonna speed up how fast I pay off the line of credit, which is gonna speed up how fast I get to the next debts I want to tackle, which also increases my chunk ability each and every month that I pay off the next debt, the next debt, and the next debt. Okay, so for this wonderful lady, we have another debt. 5,350, 2,335, 1,660, 1,370. Okay. Our cash flow in March, okay, is no longer this. It's this plus this, okay, which is 2,556.94. When I wipe out these 4 debts at once, guess what? Cash flow goes up to 28 yet again, okay, leaving me with a 2,784.94. Very conservative cash flow, okay? Now, the total amount of this is this chunk right here. The second chunk we make. Notice how it went up quite a bit. So now we're making a $10,715 chunk, okay? And I'm assuming income stays the same, all right? That's what goes in. Here's the balance, right? Expenses come out, right? They come out and they pay things. Here's the remaining balance at the end of the month of March, okay? 7,930.06. Okay, that next month, March, we got April. Income, right? She's gonna get paid again, but she's not gonna have to use her whole entire income, right? She's just gonna put in this, zero it out, okay? And now she keeps doing that for another month or two, right? March, April, May, June, let's say. June, come over here. Line of credit is zeroed out. I'm happy, okay? Now, got the cash flow increase, okay, from this original right here. I had cash flow increase from here as well. We wiped out 1, 2, 3, 4, 5, 6, 7 debts, okay, including the line of credit. All right. Now we're coming into June, okay, coming into June. Guess what happens? Chunk amount goes up again, okay? But see, right around this time is when I'm gonna increase the line of credit to 15,000, 20,000. Like I said, either I'm gonna do it or the bank's gonna do it, right? I'm gonna say, hey, let's go. It's time to increase our line of credit. Look how much debt we paid off. Boom, 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 boom. All paid off all these debts and the line of credit itself, right? You got that money going in and out. That's being reported to all the credit bureaus. And they're going to be like, wow, this woman she must be making a lot more money because she's paying her debts really, really fast. Let's give her more money, okay, so that we can tempt her to go into more debt, right, so that we can make interest off of her, because we're not making interest off of her. She's actually paying off her stuff really, really quickly, okay? That's how the banks are thinking, okay? And then you, on the other hand, you know this concept, so you're like, okay, I'll take more money because I can handle it, I can manage it, I'm disciplined, I'm not gonna go on a shopping spree. I'm gonna keep wiping out debts, okay? So June's chunk, same thing, all income going into the line of credit after I take out $12,200 to pay certain debts, okay? Expenses out, look at that, compared to $6,783.12. Now we're down to $6,378.78. Cash flow stays in. I'm gonna say 5 months, okay, to zero out the line of credit itself after making the $12,200 chunk, okay? And now let's assume we're in September, October of 2019. Okay, so we're approaching 1 year, right? Started in November, we're about to approach 1 year. Okay? Our next chunk is going to be $15,969.02. How is she going to do that if your line of credit is at $12K? How's she going to do that? Remember, we're going to increase it, okay? We're not going to have any delay trying to increase that by 5, 10K, okay? We could easily just say, hey, I want 24,000, right? Just double it. No issue there. Same thing's going to happen. The reason why I'm able to make a bigger chunk is because more and more cash flow keeps coming to me, right? And then after a year, okay, at her job, a raise, they're gonna give her, she gets guaranteed raises every year. So I'm factoring that in as well. Notice how this income number goes up, 9,870. Her income will probably be like 10,000 because this income is husband and wife. So husband might make more money too, right? Cool, cool, cool. Now, 15K or just under 16K chunk to wipe out specific debts. Expenses are down quite a bit. Okay, we're doing real good. Just 1 year in. 5908.78 expenses coming out, income going right back in. Okay, by March, the latest. Okay, very conservative, but by March 2020, line of credit should be zeroed out. Okay, now every 12 months when I'm working with someone, I like to get an idea or a general conservative number to work with to evaluate, okay, how much debt did we actually pay off in 12 months, right? Or how much debt total overall did we pay, right? So doing velocity banking, we paid off 1, 2, 3, 4, 5, 6, 7, a debt over here and a debt over here, okay? And you can just add this number, and you can add that number, the 15, the 12, the 10, and the 8707, okay? That's technically debts we paid using velocity banking, right? But remember, that major question, Denzel, am I still paying the monthly payments on all my other debts and whatnot? Like, how does that work? Yeah, through the line of credit. So she's still paying her mortgage payments, she's still paying her car payments, her other, credit card payments on the way as we get to them, right? When we're doing velocity banking, we're killing one debt at a time, okay? So when I added up all the numbers, right, came to a conclusion, 74,679.24, right, in 12 months, and just divide that by this, 5 years debt-free. She will be 5 years or less debt-free. I think she'll be happy with that, considering that I've only been using this cash flow right here, right, to begin with. So the other cash flow, whatever her heart desires. Now, I'm going to give her my 2 cents, and I'm going to give you guys my 2 cents, right? But at the end of the day, it's up to her to decide where she wants to put the extra cash flow left over each and every month, whether she wants to keep funding her retirement accounts, or put in some real estate, or put in some stocks, or some crypto, or whatever, okay? My idea is, I think we should create our tax-free bank, continuingly to use the line of credit, right? Because this cash flow, remember how I always say dump the whole income in, right? Well, the cash flow is going with it, right? Which is gonna make these numbers better, right? It's not like she's taking, 800 or 1,000 and putting it aside. No, it's all going through the line of credit first, right? But what she can do to create a tax-free bank or to fund another retirement account, a Roth, a self-directed IRA, or some crypto, is before using her cash flow to invest in something or to save money or to put money away, she can pull from here first, right? And she can run it as an expense, right? And it wouldn't harm the numbers because I'm only using that number, right? She has all that other number amount left over. So my idea is, let's get our tax-free bank set up using a life insurance asset that is tax-free if designed properly, okay? So the proper word is tax deferred, okay? But when used properly, the money can be accessed tax-free at any time, okay? We're gonna get a guaranteed growth rate on our money as we're paying off all these debts, okay? The money is liquid, meaning I can, like I said, I can pull money from it anytime without paying a 10% penalty fee, a loan fee, a tax, right? A premium, a charge, right? Don't have to pay a fee to do so. My money is safe, okay? Because insurance, the whole purpose of insurance really is protection of your wealth, assets, estates, such and such, right? And the cost of your life insurance asset will always remain the same. Matter of fact, we can design it where we only pay premiums for a certain period of time and never pay another dollar again, right? Or it can remain level for the rest of your life and you can continue to fund it should you please, right? So for me, a young guy, I'm gonna plan on funding that thing for a very, very, very long period of time. But for older individuals, you're like, 10 years, Denzel, relax. 10 years or 15 years, I'm done, I'm happy, established the kingdom, I got my legacy built, my name will last for the generations. I'm cool with that. I'm happy with that. Okay, I'm in the same boat. For doing that, paying a certain amount for a certain period of time and it drops off, guess what? You'll never have to have a cost again, number one. Your money continues to grow, and for doing that, death benefit continues to grow. So technically you were paying for a lower death benefit in the beginning years, right? Then the cost dropped off, but you continue to increase that death benefit. Even though you're not paying anything, it continues to increase. Ain't that amazing? Only designed properly, right? So we have to get the information. We have to evaluate people when they're talking about financial products. You have to get their side, their perspective, their opinions and thoughts, and then you want to do research and get the facts, right, on your side. Find out about truth and principles in finances, and then you're able to make an educated decision as the customer. So you don't get buyer's remorse or any regret on, putting your money into something and you're like guessing, you're in la la land. You're like, I don't know if I'm gonna become successful off of that. Okay? when you study, right? Study to show thyself approved unto him, okay? When you increase information and knowledge, we're gonna get there. We're gonna get there, okay? The other beautiful thing about this right here is she has the ability to have money work in two places, just like a line of credit. The money that we're using is paying the debt, and then the money that we're using is also paying other debts. Or when we become debt free, she can still have this line of credit. She doesn't have to close it. By the time she's debt free, that line of credit might be 30,000, 40, 50,000. She might have 2, 3 different debt weapons. Well, she can use those to leverage to acquire even more debt, right? Meaning assets, properties, right? Now this isn't bad debt. This is debt that produces income, right? Produces us our pension fund, gets us our, paychecks in the mail for not doing any work. Okay, that's the good type of debt that we want. This right here is a hedge. It's a protection. Remember, this right here is not an investment. Even though it has all these benefits and all these features, by no means is life insurance an investment, right? Life insurance is an asset, okay? Protects wealth, creates tax-free money, right? For all the money she's gonna make over here. Because you're gonna run into tax problems. The more money you make, the more problemos, right? But good problems. And we just have to focus on, okay, and this is where you get your team in place. Tax, lawyer, attorney, this, the real estate guy, the broker, the financial guy, hopefully, right? And we keep moving forward from there, okay? So I hope this is very helpful for my friend that contributed at the tier 3. This video is specifically designed for you and to help bring the numbers to life, bring it all into perspective so that you can take action. And you know I'm here for you at any time. You can reach out to me, email me. That's what happens when people like you give and receive, right? When you give, you're gonna receive multiple, tenfold, pressed down, shaken together, running over. Yes, yes, amen. All right, my name is Denzel. You have yourself a wonderful day. If you guys have any questions, comment below. Anything that didn't make sense. Denzel, you didn't factor in the interest cost. Trust me, I did. Trust me, okay? When I say conservative, right? Whenever I'm mentioning conservative months, okay? That's my cushion. That's my my interest cost factoring in. That's my we got Christmas, Thanksgiving, New Year's, Valentine's Day, right? Where Americans spend all their money, right? Towards the end of the year, they use the bonus that they get, right? Or the tax refund, right? I'm factoring all that in. Trust me. Why do you think I always lowball people on their cash flow? Because if anything goes down, we still get the results that we want. Yes? Okay. Cool. Have a wonderful day. God bless.